Foundation Accounting, Chapter number 10, Partnership and LLP Accounts. There are 6 units given in this chapter. How to understand the adjustments involved in each of these chapters, and also the accounts to be prepared in each of these units. The first unit talks about the basic concepts. The second one talks about the goodwill computation and goodwill treatment. Third unit talks about admission. Fourth one talks about retirement. Fifth one talks about death. Sixth one talks about dissolution. In the unit number 1, that is basic concepts, we prepare only 2 accounts: profit and loss appropriation account, partners capital account. Please note, it is not profit and loss account, it's profit and loss appropriation account. Appropriation here means the distribution. Profit and loss account and profit and loss appropriation account are 2 different accounts. Profit and loss account deals with the above the line item, whereas profit and loss appropriation account deals with the below the line item. Profit and loss account shows how our partnership firm has earned its profits, whereas for the same accounting period, the profits earned by the firm, how it has been distributed among the partners, you can see in the profit and loss appropriation account. And the second account we prepare is profit partners capital accounts, which can be prepared under fixed system, under fluctuating system. Under fixed system, we prepare 2 accounts, that is capital account and the current account. Under fluctuating system, we prepare only 1 account, that is capital account. We need to learn 5 adjustments involved in this process of preparing these 2 accounts, that is salary or commission to the partners, interest on capital adjustments, interest on drawings, interest on loan, profit and loss sharing ratios. When it comes to the unit 2, actually it talks about goodwill computation and treatment. There is no separate account involved here, that I have prepared another video, you can refer to that. Admission of a partner. In case of admission of a partner, we prepare 3 accounts. One is profit and loss adjustment account, which is also known as revaluation account. Kindly know that profit and loss appropriation account and profit and loss adjustment account, again they are different. Here it shows how the profit has been distributed. Here it shows whether a firm has earned profits or incurred losses on reassessment of assets and liabilities on admission of the partner. And we prepare partners capital accounts and balance sheet after admission. These are all the 3 accounts we need to prepare. What are the 5 adjustments we need to do? It is better to do it in the order only. First, you please revalue the assets and liabilities. Second one is distribution of reserves or undistributed profits. Third one is the capital which is brought in by the new partner. Fourth one is goodwill adjustments. Fifth one is adjustment of capital in proportion to profit and loss sharing ratio. So the brief summary of the admission of a partner is that we need to prepare 3 accounts and 5 adjustments. Coming to unit number 4, which talks about retirement. In case of admission, a new partner is entering the firm, whereas in case of retirement, an existing partner is leaving the firm. In this case, we need to prepare 4 accounts. Profit and loss adjustment account, which is nothing but a revaluation account. The methodology of preparing this account is almost the same like this. And the second one is partners capital accounts, and then balance sheet after retirement, retiring partner's loan account. Sometimes if the money due to the retiring partner is not settled immediately, on such a circumstances, the money will be transferred to his loan account. So on such a cases only this account will be prepared. What are the adjustments we need to do in case of retirement of partner? Revalue the assets and liabilities, distribution of reserves, capital to be given to the outgoing partner, goodwill adjustments, and then adjustment of the capital. Coming to the unit number 5, death, it is almost similar to the retirement. The only difference between the retirement and death is that Retirement happens normally at the year end when all the books of accounts are closed. Death can happen any time in the year. So all the adjustments and everything almost same as in the case of retirement, same as in the case of retirement, except that because the partner was there for a fraction of a year, we need to give him the profit for that particular whatever the fraction of the year he was there. For that we prepare adjustment known as a profit and loss suspense. We normally prepare executor's account in case of death and we compute whatever the amount due to the executor of the deceased partner. Last one is called dissolution. Dissolution means literally closing the firm. When we have to close the firm, we prepare an account known as a realization account. Kindly note that we don't prepare here revaluation account, we prepare realization account. The purpose of realization account is to realize all the assets and pay the liabilities. And we prepare partners capital account to assess whether a partner has to bring the money or if there is any excess money, how much money they are entitled to get. Cash and bank also assess the available resources. We don't prepare balance sheet here simply because the firm only closed, there are no ledger balances to show. Though these steps what given are not necessarily the exhaustive steps, just illustrative. Normally when we have to prepare dissolution accounts, we transfer all assets to realization account, transfer all liabilities, and then we realize the assets, we pay the liabilities, we pay realization expenses, and then we close the books in general circumstances. So it may include few more transactions, depends on case to case basis. So this is a summary of the chapter number 10, partnership and LLP accounts.